Quick check of the markets now. Tom Piotrowski over at CommSec. Good morning to you, Tom. How are the markets looking today?
Pete, we're going to kick off on a slightly weaker footing this morning. The futures are telling us we'll be down by around 0.1%. Not really capturing the sentiment on Wall Street where there were gains, but again, they were pretty modest, I suppose. The Dow was up by around 0.4%, a little bit less than that. The S&P 500 and the Nasdaq each not quite up by 0.2%, but there was an important outcome in terms of the latest update on what's going on in the US employment market. This is a measure of job openings, and it fell to its lowest levels in just over 3 years. So the way that was interpreted by the markets is that there is a softening in the labour market. That's important because it gives the US Fed some scope to cut rates. They've often spoken about employment being the limiting factor there. So long and short-term interest rates move lower by a decent margin. It's the fifth consecutive session where we've seen long and short-term interest rates fall. So that's significant. In the local context today, Pete, we get first quarter national accounts or GDP figures to tell us how the Australian economy performed. The risk here is that we get a negative number, and that will be a challenging conversation for the Reserve Bank to navigate in the event that it does. The markets are expecting expansion of only the slightest amount by 0.1% in the quarter. So this is a very fine road to tread over the course of the next couple of hours, I suppose.
All right, Tom Piotrowski, thank you.